On All About Stocks this week, it's a market going from strength to strength. The small and mid-cap indices shine. We'll tell you what your investment strategy should be. Our investment advisor Gaurang Shah tells you why you should be investing in HUL for the long term. And Gaurang has made a profit of 90% on his portfolio, beating the Nifty by 50%. We'll tell you how he did it. Welcome to All About Stocks. Thank you so much for tuning in. This is ET Now. I'm Faye D'Souza. It is a good time to be an equity investor in our markets. The market seems to be going from strength to strength, even though we had 2 trading holidays over the last 1 week. What we're going to do now is tell you what stocks you should be investing in, what your strategy should be, and how you can take advantage of the bull run that we're witnessing in our market right now. So if you have a question about a stock you're holding or a stock you want to buy, write to us. Our email ID is at the bottom of your screen. Before I bring in my guest, I have Ajay standing by as always. He's going to tell us what happened in the market this week and what we should take note of. Ajay.
Well, Faye, it was more or less a week of consolidation this time round for Indian equities, or I would say digesting the big gains which were made in a broad-based manner last week. We rallied about 1,000 points on the Sensex, about 500 Nifty and around 1,500 on the Bank Nifty. So this particular week, which was actually a truncated one with 2 trading sessions less in this particular week, actually we were just digesting, but at least we were maintaining the gains. In fact, if you look at it, the benchmark indices have added just about 0.25%. The big game was actually happening in the broader markets, which continued to add weight this particular week. Around 2 to 2.5% is the kind of gain which we have seen in the mid cap and the small cap indices, while the benchmarks have been slightly on the flatter side. Also, being a truncated week, the volumes were relatively low and delivery based activity was extremely low. More F&O happening, more kind of a trading bets which were seen happening this particular week. If you talk of sectors, interestingly, real estate sector was the best performing sector this particular week, followed by healthcare, and some gains were seen in the mid cap end as well. Whereas on the downside, stocks like oil and gas and auto actually were on the downside. Most of the analyst commentary suggests that perhaps best of the gains of oil stocks are over for now, because the fall in oil prices and the benefits from diesel regulation is everything in the price and discounted. Autos also, October sales are weak, so ever since that came out, there was a price correction happening. But most of the traders on the street are still suggesting that it's a buy on dips market. In fact, they are looking at a lot of positive cues which is awaited the next week, which will really determine the direction. The IIP data for September month plus the WPI and CPI would be out, and also most of the traders are watching out for the December 2nd policy from RBI, anticipating a rate cut. So all these macro factors which are lined up in the coming week and the next is something which should determine the direction in the near term. This week, of course, you are at least digesting the gains made last week.
All right, Ajay, many thanks for that update. Joining us today on the show, Gaurang Shah, Vice President at Geojit BNP Paribas. Gaurang, thank you so much for joining us. It is a fantastic time to be an equity investor. Even for those people who have been staying out of the market so far, it's a good time to get in. But the question that everybody's asking is, do you believe our market is overheated at this point, which means that is it too expensive? Has it run up too fast? Is there a likelihood that it will come down quite drastically, or we might see a sharp correction in the future?
Well, thanks, Faye. It's always a pleasure to be on your show. And whether the markets are overheated, actually the question should be, where are you planning to get invested? That's going to be a big question. And which are the stocks that you're going to identify? Yes, in terms of flows and in terms of scaling up in the market, I think in the emerging market basket, India has been the best performing market till now. And this outperformance is going to continue given the fact that you have earnings season which is more or less in line with expectation, in some cases better, in some cases a little bit on the negative side. But my understanding is that dips in any that will be seen in the market. And let us face it, Fair, no market in the world is going to give you one-way direction. It's always a two-way move in the market. So in a market like India, when the optimism is just growing day by day, I think best opportunities will be there to get invested in. But it's also prudent to know and understand what sectors and stocks you pick up and how long you stay invested and what is the target that you kept in mind in terms of what return you want to make on capital.
All right, so then that's the question I'm going to ask you. Let's take it step by step. We know the finance minister spoke out earlier this week. He talked about the fact that the government should at this point consider exiting some of its businesses, especially the PSUs that are not doing very well. From the point of view of a stocks investor, what does that mean for those of us who are holding PSU stocks? What does that mean for the divestment plan that the government has going forward?
Well, I think it will only possibly unlock value going forward from here on, because some of the PSU stocks which have been sick and which have been reporting losses have actually been a terrible underperformer, and maybe somewhere the management and the way the ethics of doing business and forward-looking strategies were missing out. So I feel that there could be a little bit of painful affair for all those PSUs which would possibly go off for direct sell-off or reducing the government stake via an offer for sale or any other instrument or platform. But you need to understand one thing, that things have just started to turn around for most of the PSUs, especially if you look at the oil and gas exploration and oil marketing companies. Similarly, with defense being opened up for FDI, again there will be opportunities over there. So as we go forward from here on, it's going to be important to see what the commentary is from the management, and of course the most important thing will be at what valuations do this disinvestment go off or a direct sell goes off. It will be a while before that happens, fair, but if you are invested and if you don't have the patience and if you don't have longer time horizon, then I think at best what I can suggest is try to get off those stocks which you feel are underperforming at any kind of a pullback that you see.
Well, Gaurang, obviously, if you look at sectors at this point, pharma and realty outperformed this week. Realty also because there's a very clear message from the government at this point that they want to push housing, they want to push real estate, and then there was the pharma performance as well. Right now, if you were to give advice to either first-time investors or slightly nervous investors who are getting in at this point, what sort of sectors would you recommend they get in? Or do you think that this is the time to be completely sector agnostic and just cherry pick stocks?
Well, I think you need to be very, very selective when it comes to picking up stocks, whether it is in the high beta or whether it is in the safe haven stocks, sectors, I beg your pardon, like the pharma and the FMCG and the IT of the world. Now, if you look at the performance of real estate, yes, this week was good. But if you look at 2007, 2008, then the valuations of some of these real estate companies are nowhere close to even 10% than what they used to be. So my advice is that if you are risk averse, then please avoid high beta sectors, maybe real estate, maybe aviation, maybe infra for some time, because this is still work in progress. Fair. We have only heard the government come out with the policies. Implementation, ground level changing, getting capital attracted towards real estate is going to be a little bit of stretched out period. So my advice would be that pharma, IT, private sector banking, FMCG, oil and gas, that is exploration, and OMCs both put together, and some of the commodity stroke utility sectors like the cement sector. I think these are the themes that you should follow and concentrate on large cap first, then shifting your focus onto selective mid caps.
Well, we're also now looking at the winter session of Parliament, which will eventually lead out to the budget session and the budget that we'll hear in February next year. Now, we've heard from the government things like the insurance bill is on the agenda. We know that GST is going to be on the agenda as well. The power sector and the money that's coming into the power sector, the bottlenecks that need to be cleared out, housing and, of course, banking. So, Gaurang, tell us what the strategy should be for us as investors at this point. If we are going to make a strategy right now to benefit from what's going to come between now and February, what would you recommend we focus on?
Well, I think banking and finance is going to be something that you need to look out for, especially in the NBFC segment, all those companies which are into financial services, because they directly get impacted if there is going to be an in-consensus platform on which all the stakeholders come and give an approval for that insurance bill to be passed. So you have, of course, names like M&M Finance, you have Bajaj Finserv, you have Bajaj Finance, you have Max India, you have Reliance Capital. So you need to identify opportunities over there. You are also looking at a trigger of an interest rate cut, because even those expectations are picking up as the days go by, with the domestic data points being supportive, and in case if the ones that are likely to come in the near future, if they are also supportive, then possibly you may see an interest rate cut come through before this year ends, or maybe as early as Jan, Feb, March 2015. In terms of GST, in terms of labor reforms, in terms of land reforms, in terms of getting environmental clearances, I think what you need to have in mind is cap goods engineering space, infra space. Again, infra is a little bit hot iron rod, you need to be careful when you are touching it, because there are some names which can actually take you for a ride. But names like IRB Infra, ILNFS Transnet, I think some of these names are par excellence in terms of their business and of course the opportunities going forward from here on. Cap Goods Engineering would be the other one. Oil and gas, again, both exploration and oil marketing companies on fallback of reduced crude oil prices, subsidy burden getting thing of the past, and of course freeing up of diesel prices from the regulated regime. I think these are a lot of things, and my focus would be on GST, because if you have any amount of positive news, even a small bit of it in terms of timeline or deadline, whatever be it, straight away your GDP pushes up by about 1.5 to 2%. Of course, it will take time, but that particular factor of GST implementation is going to be a major game changer.
All right, and I'll tell you why we take Gaurang's recommendations so seriously, because I will pull up his report card. Gaurang recommended BPCL on the 10th of October when it was trading at 675 rupees with a target of 750. Has crossed the target in less than a month. Gaurang, obviously, we have to revise our target at this point. What's your recommendation for viewers who took your advice and are holding the stock right now?
Well, I feel extremely pleased and glad when targets get achieved in such a short span of time. It was a conservative target. We are a conservative organization, and we do believe in creating wealth rather than damaging wealth. I would say that given that it has reached the target, and the principle that I follow, have a target in mind in terms of what return you want to make. So if you are looking at the return, it's a decent return. For those who want to book off, can book off, book profits, take money off the table, look somewhere else. There are a lot of sectors and a lot of stocks that are looking quite attractive. But given the fact that the lower crude oil prices and freeing of diesel from a regulated regime is extremely going to augur extremely well for companies which are into the OMC, like the likes of BPCL, HPCL and IOC. If you want to hold on to it, put a profitable stop loss and trade the upside. For those with low risk appetite, can consider booking some profit.
All right, then we've asked Gaurang to bring us one more recommendation this week. He's brought us HUL. HUL ended the week at 761. Now, the stock has been on a steady rise for the last 6 months. It's gone from 605 to 761 in 1 year. Now, Gaurang, you mentioned some time ago that you gave us a list of various sectors to look at. The consumer sector was not in that. And of course, there's a view right now that, given what's happening with the auto sector, and that normally sort of is an indicator of how consumer sentiment is moving in the country, do you believe really that HUL and the other stocks within the Indian consumer segment right now will start to do well over the next couple of quarters?
Given the consumption theme and given the kind of demand that will come up, especially from the semi-urban and rural area, I am quite optimistic. And if you look at the commentary of most of these leading FMCG companies, be it ITC or the HUL, or as a matter of fact Dabur or Marico or Godrej Consumer, I think they are quite upbeat and optimistic about demand and growth coming in from semi-urban and rural area. One particular aspect was deficit rainfall, which has not been the case because the deficit is just close to 10% or below 10%. Actually, we were speaking about 40-45% when the monsoon season started. But given this optimism, and given the fact that margins should stabilize, input costs should possibly contract, thereby giving a margin expansion case, I am quite optimistic that FMCG sector will definitely deliver. And amongst that, I think HUL should perform with line of expectation that we have. It's a conservative target of 800, so one can use dips or correction days to get into HUL. But we would again mention that given the kind of quarter-on-quarter earnings, we feel that the 800 target, which is a medium to long-term target, could be revised upwards.
All right, so that target of 800 on HUL right now, that's Gaurang's recommendation for this week. We're going to take a quick break, but when we come back, we'll talk about Gaurang's own portfolio. It's our strongest portfolio right now on the show, and we'll tell you what stocks he has in it and how he's done so remarkably well. That's on the other side. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Gaurang Shah is still with us, helping us figure out a strategy for our long-term portfolios. Now, Gaurang had designed a portfolio for us on the 14th of December 2012. That portfolio is currently at an overall gain of 90%. The Nifty over the same period is up 41%. So, Gaurang, you're not just doing really well, you're beating the Nifty by a really handsome margin at this point. I'm going to go through the list of stocks in your portfolio and then we'll talk about it. There's IndusInd Bank that's gone up 72%. Sun Pharma, Godrej Consumer Products, Havells is up 294% since we bought it. M&M, Wockhardt, Mindtree up over 200% as well. Apollo Hospitals, Eicher Motors is up 172%, and of course Infosys, that's up 25%. Gaurang, this is fantastic. And you know, a lot of viewers who are watching right now are automatically going to ask, can I get in at this point? Is it too late? If I get in at this point, is it fair for me to assume a similar return over the next 2 years?
Well, fair. Equity as an asset class is risky considered to the other asset classes because it's like high risk, high return kind of an investment asset class. To question whether you get in at this point of time and whether you expect the same kind of return, I think it's going to be a little bit risky. But again, having said that, fair. You know, when I created this portfolio, I had some names which are no more there. It's most important to relook at your portfolio at every 3 months, 6 months interval and do changes if the stock is underperforming or not performing as per your expectation, if there is any news flow, etc., and switch on to other stocks. And that's how I have done. I think I've churned at least 2 or 3 stocks which I had earlier bought when I actually made this portfolio up in December 2012. Now, there are names in this portfolio which still have the capability of delivering great returns. Case in point, of course, names like Infosys, IndusInd Bank, I believe M&M, as a matter of fact, I believe would definitely go and contribute. The name that I'm a little bit skeptical about in the recent time has been Wockhardt. The numbers were absolutely dismal, but the stock corrected and has pulled back. My worry is from the warning that the company has got in its 2 facility and they have not been able to sort that particular issue out. So there are stocks in this particular portfolio, minus of course Wockhardt, that you can buy it at current levels on dips, start accumulating and give at least 1.5 to 2 year time horizon fair. If you are betting on a steady government like the BJP Modi government in place, then I think whatever policy decisions that will be taken right now, the fruits of that or the positive impact of that will be seen in a year, 1.5 or 2 to come. So yes, it is not late. You can definitely start nibbling into some of these names that I have in my portfolio.
All right, so that's Gaurang's portfolio. Like I told you, it is our strongest performing portfolio right now on the show. A recap of the stocks so you can write them down. IndusInd Bank, Sun Pharma, Godrej Consumer Products, Havells, M&M, Wockhardt, Mindtree, Apollo Hospitals, Eicher Motors, and Infosys. If you have questions about that portfolio for Gaurang, feel free to write to us. Our email ID is at the bottom of your screen. We have another question for you. Radhesham has written in 400 shares of financial technologies bought at 326 rupees. Should he hold on to that stock? The stock ended the week at 182. Gaurang, is this the time perhaps to, you know, give up on this stock, maybe cut losses, move on to a more promising sector or a promising stock?
I would advise IndusInd Bank over here. There is no point fair getting emotionally attached to such stocks which actually have a lot of confusion rather than clarity, and we don't know where the business is going to go. So no point getting sentimentally attached to this particular stock. Sell it off, get into IndusInd Bank. We have revised our target upwards to 785, and mind you fair, if interest rates like I just mentioned at the beginning of the show, if they come in before this year end, then I think the entire banking, finance, interest sensitive and the equity market will definitely give it a thumbs up. So, and of course the numbers are par excellence. So switch on to IndusInd Bank.
All right, switch on to IndusInd Bank. We have another question. Subodh Joshi has written in 7,000 shares of 3i Infotech bought at 8 rupees and 40 paise. Should he hold on to that stock? It ended the week at 9 and 15. What should he do, Gaurang? What would you recommend?
Well, I guess he is one of the lucky ones who's in profit actually, though however small that profit will be. Sell it off, buy into a Dish TV. We have a target of close to about 70 rupees. We may revise it upwards in case the entire digitization process, which is in its 3rd phase, I believe, does shape up well. And of course, the competition from the unorganized sector dies down by various rules and regulations that the authority might come up with.
Another very quick question. Shashank has written in. He has 100 shares of Biocon, which he bought at 410 rupees. Should I hold on to this stock? Biocon ended the week at 454. It is eyeing the Latin American markets for growth right now, but its September numbers, for that quarter were not very, very impressive. Gaurang, what would you recommend, on Biocon?
Well, there has been a concern in the numbers, but I am quite optimistic on one commentary, which, if I recollect right, fair. About 2 or 3 years back, the management decided to invest quite a bit of a huge amount in its R&D. As a result of that, you are seeing those positive results coming out in the numbers that we are seeing currently. Now again, you have investment in Malaysia, and I believe that by 2016-17, that particular facility will be commencing its operation. There will be huge positivities. A very conservative target of 485. You need to review the stock on fallback of corporate announcement that you will hear in the near future. So as of now, hold on to it.
All right, hold on to that stock. We're going to take a very quick break, but when we come back, we'll talk about stocks like Unitech and ONGC. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Gaurang Shah is still with us, helping us figure out a strategy for our long-term portfolios. Gaurang, thank you for staying with us. It's time for us to look at our viewer portfolio. Survadeep has written in. He sent us a list of the stocks in his portfolio, and he's the lucky viewer whose entire portfolio we're going to look at and review today. Right on top, he has 500 shares of JP Associates, which he bought at 55 rupees. That stock ended the week at 33. What would you recommend he does, Gaurang?
Well, it's a terrible underperformer, and there is no sign of any recovery happening. Either at current levels or at any pullback, sell off and get into a DCB. I've been speaking about this particular stock for quite some time, if you recollect. We have a revised target of 110 on DCB, and in case if, of course, the interest rate scenario does work out with our expectation, and of course the performance improve, we could revise it upward.
Well, he also has 20 shares of Cipla, which he bought at 578. Cipla ended the week at 650. So what would you recommend he does with Cipla? We did talk about the fact that the pharma sector is doing really well. Is Cipla the best option for him within that pack?
Well, given the kind of optimism on the product pipeline and the positivity on quarter-on-quarter numbers, 680 should be the target. Review it at that point of time.
300 shares of Unitech bought at 20 rupees. The stock ended the week at 22.55. Now, we talked again about the real estate sector. Gaurang mentioned the fact that there are some names that he is bullish on within the real estate sector. Unitech was not one of those lists. Gaurang, for someone who's in with Unitech at this point, at 20 rupees or 22 rupees, what would we recommend we do? Does it make sense to now come out of that stock, move into one of the stocks which has a reputation backing it at this point, that it will be able to take advantage of the boom that's coming?
Well, first of all, I think he should consider himself lucky because he is one of those few investors in Unitech who is actually in profit. Take that profit off, get into Idea Cellular. I think there's going to be a major game changer for the entire telecom service provider pack. There could be short-term negativity in terms of license coming up for renewal next year, but Digital India campaign by the BJP government led by Mr. Narendra Modi, and of course the optical fiber grid network pan-India should open up much more avenues in terms of revenue generation for telecom service provider companies like Idea and Bharti. As a disclosure, we do have positive coverage. Idea, we have a target of 185, so switch on to Idea.
All right, let's also take a look at his next stock. He has 20 shares of ONGC, which he bought at 405 rupees. ONGC ended the week at 409. Now, we know the government has a massive plan for ONGC in terms of a stake sale. What will this mean for investors who are holding the stock, Gaurang?
Well, first of all, I think let me tell all your viewers that there is going to be an opportunity whenever that disinvestment comes through, because normally that, any government PSU disinvestment comes in at a discount. So whatever discount you want to apply for it, or if when the stock corrects, when that offer comes into the market effectively and you see a correction coming in, please go and buy into ONGC. For this gentleman, he's bought it at 105. Any opportunity closer to 380 or 365, in case if there is going to be a little bit more than expected deeper discount coming onto the OFS offer, I think it would be an opportunity to go and buy into ONGC. As a disclosure, we do have a positive coverage. 475 will be the target.
All right, unfortunately, we've completely run out of time on this show. If you have a question for Gaurang, write to us. Our email ID is at the bottom of your screen. Gaurang, as always, it's a pleasure to chat with you on All About Stocks. We look forward to having you back again really soon to talk about your portfolio. Thank you so much for spending time with us. Thank you
Pleasure.
for watching.